I can get behind this thing of the banks, as in traditional high street banks, say that like bank accounts are probably too big to fail. We've seen in America that quite a niche bank, Silicon Valley Bank, nearly went under and they bailed that out because of the damage. One area that I'm really interested in is brokers, as in trading and investment brokers. There's a lot of brokers at the minute that run at a loss as they try and drive down prices, but you still insure those essentially through, you cover them. How do you feel about the fact that you have an insurance there that for lost businesses that are losing millions a year and that probably some of them won't survive?
So for us, the kind of stability of the industry and all of that completely sits outside of our remit, right? So that sits with the regulators, it sits with those kind of bodies and government and etc. How our protection works for things like brokers, so we had a couple of brokers, there's some examples you can read on our website, all of these, but there's one that went under in 2019.
Beaumont, was it?
Beaufort and
sorry.
SVS Securities. So both around that same time at 2019, 2020. And how our protection works in these cases can be very different. Because obviously if a broker fails, typically your assets and your money, although the broker is holding them for you, they are safe. They're not, if the broker goes under...
Should be ring-fenced separately.
Absolutely, they should be kept separately. So in those cases, in SVS and Beaufort, how FSCS helped, because that limit still applies, 85,000 per person, is we paid through the administrators, we paid the costs of transferring those assets to a new broker. So that's how our protection worked in those scenarios. And that's something that's quite typical for a broker failure. So instead of us kind of giving you cash back, we pay for the costs of transferring it, so you don't have to fork out, what it is, a couple of £1,000 a person, however much it might be, to move your assets to a new broker. And then obviously once you're with the new broker, you can then choose what you want to do with that. So that's typically how it's worked for us in like recent times. But it is very different to deposit taker failure in that it's not kind of just an automatic, here's your money back. A lot of work tends to have to go into
What kind
those
of
things.
time frames do you think to unravel a situation like that?
Really depends on the insolvency, because obviously once this company goes into insolvency, there's an insolvency practitioner, administrator involved. It really does depend on the situation. And FSCS, although we pay, we're not managing the administration, so a lot of that is outside of our control. We work really closely with them, but think of it in the case of SVS, it was around 12 months or something like that. It's definitely longer than the 7 days you're going to get on a deposit, but they're much more complicated, and the kind of rules are very, very different around how it works for things like
But it feels like it's more likely that people might need that support in that sector than it is in, say, traditional banking, where you've got these behemoth businesses that are almost protected by...
So each year it varies year on year, but in recent years, we've typically declared around 100 firms a year in default. So we've stepped in and helped customers of around 100 different companies every year.
And these are brokers more than...
No, so typically actually they're financial advisors. That's what I was kind of getting onto.
Okay.
Most of what we deal with is financial advice at the moment.
How does that go wrong?
So people give advice that isn't suitable for their client's circumstances, isn't suitable for their kind of declared risk appetite or things like that. And because most people who are seeking financial advice, they're looking to invest for the long term, right? They're not looking for a quick win. They're looking for maybe investing for their retirement or something like that. So how the typical chain of events is, you go seek some advice, you use a regulated advisor, you do the right thing. They potentially give you advice that isn't right for you. And obviously they have hundreds of happy clients who everything works really well for. You might only realise that advice wasn't great 5-6 years down the line, right? You come to retire or you come to assess how your money's doing. You then think, oh, something's gone wrong here, I need to complain, and the advisor isn't there anymore. They might have gone into liquidation. Obviously in this country there's a lot of small firms. They're not all big firms. They can be one-man bands or, a handful of people. So they might have gone into insolvency. They might have just folded up shop and retired themselves or whatever. If they're gone, you haven't got anywhere else to go. You can't take them to court. They don't exist. You can't go to the ombudsman because they don't exist anymore, and you have to come to us. And that's when we will investigate the firm, make sure it is definitely insolvent, make sure your claim is valid, and then we're able to pay out on those claims. So those are what we see absolutely the most of at the moment is, I've had advice on a pension or an investment and it's just not worked out for me and it wasn't right. I think it's important to mention that we absolutely can't cover poor performance. I mean, that's what investing is, right? Again, it's back to your own personal risk appetite, and some investments do well, some don't. If you've invested in something and it's not turned out, that's kind of is what it is. But if you've taken regulated advice and that advice is proven to be not right for you, that's where we are able to step in.
That was Emma Barrow from the FSCS. If you want to learn more about how well protected your investments are, click here, watch a full interview.
What does FSCS stand for, Tim?
Financial Services Conduct Security
Commission
Authority. What's it stand for?
Bro. Financial Services Compensation Scheme.
That was close.
Yeah. You need to watch a full episode, mate. It's right here.